This is Craig Haugard with your Financial Issues Ag update for March 3rd. Well, turnaround Tuesday was the theme yesterday in the grain markets. After overnight weakness, grains found eager buyers with weakness in the dollar and stories circulating about commodity inflation helping to support the overall grain markets. Corn closed higher as it was also supported by growing concerns with South American production. In Argentina, the 7 to 10 day outlook calls for a continuation of dry and hot. While in Brazil, the slow planting pace had analysts yesterday start to drop their corn production estimates. Yesterday, we saw some analysts drop their estimate by 1.2 million metric tons. However, if you look at the historic planting pace comparisons, it would suggest there's the potential for a reduction in the Brazilian crop of anywhere from 5 to 10 million metric tons. And that prospect had corn futures solidly higher yesterday. Soybeans rallied on a combination of slow Brazil harvest concerns, a large Brazilian shipping lineup, and profit-taking after 3 days of selling. Now, Brazil's crop is only 25% harvested versus the 40% that would normally be in the bin by this time of the year. But that also means that there's roughly 33 million metric tons of soybeans available in the supply chain. And that's far more than the 19 million metric tons of beans that are needed to be loaded in the lineup of ships that are waiting at Brazilian ports. That lineup is the largest in history, but then so is the size of the Brazilian soybean crop. Traders are also still waiting for China to make its next move, but so far they've been very patient, and part of that may be driven by collapsing soybean meal prices in that nation. All three wheat classes were higher yesterday. In fact, the spot futures all recovered more than they lost in Monday's trade. Much of the strength was attributed to declining crop conditions. In Kansas, the crop is now rated as 37% good to excellent, and that's down 3% from last week's numbers. Oklahoma came in at 46% good to excellent. That's 2% less than the 5-year average for this point in the year. In Texas, the good to excellent ratings stand at 28%, and that is also down 2% from what we had rated for Texas just last week. Cotton futures traded in a tight trading range before ultimately closing lower for the day. At the close, the May futures were down 58 points, settling at 90.99. Livestock futures were mixed. At the close, April live cattle futures were 45 cents higher, while April feeder cattle were down 65 cents at the closing bell. Spot lean hog futures also were in full retreat, with the April futures finishing $2.37.5 lower. Class 3 milk futures broke out of their recent trading range and closed nicely higher. Traders pointed to affirming global prices and U.S. government purchases, coupled with the less-than-expected milk production that was reported in January's USDA report, as reasons for their optimism. At the close, April futures were 39 points higher, settling at $17.80. Meat cutout values were mixed. We had choice box beef $4.35 lower, closing at $234.68. Select boxes were down $1.47, settling at $226.17. Pork carcass cutout values, on the other hand, finished $2.50 higher, ending the session at $94.87 per hundredweight. This has been Craig Haugard with your Financial Issues Ag update. We'll be right back with more financial issues after this.